Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover the hidden stories in corporate filings. And let's just say today we've got a fascinating look at a company that is trying to power up the future, but is facing some serious headwinds, especially when it comes to their finances. We're diving into Shorepower Technologies Incorporated's latest quarterly report for the period ending the 30th of September, 2025. This document is packed with numbers that tell a story about where the company stands. Let's kick things off by looking at their balance sheet. This is like a snapshot of what the company owns and what it owes at a specific moment. As of the 30th of September 2025, it looks like Shorepower has total assets of about $74,000. That might sound low, but it's actually up from about $65,000 at the end of 2024. Now, when we look at what they owe, their liabilities are significantly higher, around $1.9 million. This means they have a lot more debt than assets, and that is a big red flag. Looking at their liabilities, the biggest chunk is in accounts payable and accrued expenses, totaling over $1.2 million. This includes things like money owed to suppliers and employees. They also have significant amounts owed related to officer compensation and interest, which tells us they have a lot of money tied up with their own executives and in loans. And then there is the accumulated deficit, which is pretty substantial, sitting at over $3.1 million. This number represents the company's total losses over time, meaning they've spent more money than they've earned since they started. For the 9 months ending the 30th of September 2025, they reported a net loss of around $237,000. And last year for the same period, it was even higher at over $311,000. This ongoing pattern of losses is a serious concern for the company's long-term survival. Now let's talk about revenue, which is how the company makes money. For the 3 months ending the 30th of September 2025, their total revenue was just over $8,300. This is a big drop from the same period last year when they brought in over $15,400. That is a nearly 46% decrease, which is quite alarming. Looking at the longer 9-month period, their revenue has actually shot up significantly. For the 9 months ending the 30th of September 2025, they reported over $180,000 in revenue, a massive jump of more than 241% compared to the same period in 2024 when it was just about $52,700. This huge increase is attributed to new government contracts they've been able to fulfill. While this looks good on the surface, it is crucial to remember that this revenue growth is coming from a very low base. However, even with this revenue jump, their costs are also high. The cost of revenue for the 9 months is over $65,000, which eats into their gross margin. Their gross margin for the 9 months is positive this year at over $111,000, which is a huge improvement from a negative gross margin of over $10,400 last year. This means they are getting better at managing their direct costs relative to their revenue. For the 3-month period though, their gross margin is still negative. They reported a gross margin of over $8,000 in the red for the 3 months ending the 30th of September, 2025. This indicates that while they are improving their overall cost management, the short-term revenue is not enough to cover the immediate costs to generate that revenue. When we look at their operating expenses, general and administrative costs have more than doubled compared to last year, going from about $12,000 to over $37,000 for the 3-month period. This could be due to the costs associated with being a publicly traded company and managing operations. This brings us back to the bottom line. For the 3 months ended the 30th of September, 2025, the company's net loss was around $137,800. This is a significant increase in their loss compared to the same period in the previous year, where the loss was about $77,100. The increase in loss is driven by higher operating expenses and the shift from other income to other expenses. Let's look at cash flow for the 9 months ending the 30th of September 2025. The company received about $35,500 from operating activities. This is a very positive change from the previous year when they used over $152,000 in operations. This improvement is mainly due to collecting outstanding accounts receivable, so getting paid for services already delivered. On the financing side, during the 9 months of 2025, they received a small amount of $5,000 from their CEO and repaid it back. For the same period in 2024, they repaid over $113,000 to their CEO for loans. This clearly shows a dependency on the CEO for funding. Speaking of the CEO, Jeff Kim, there is a lot of accrued compensation for him outstanding, over $456,000 as of the 30th of September, 2025. This means he has deferred a significant amount of his salary, which is being added to what he is owed. The company also has multiple promissory notes with Jeff Kim. One of them, for over $837,000, accrues interest at 6.42%. Another note for over $207,000 accrues interest at 6.63%. These amounts represent loans from Mr. Kim to the company, and the interest adds to the company's expenses. Overall, the company's financial health is precarious. Their total stockholders' deficit is nearly $1.9 million, meaning their liabilities far outweigh their assets. The accumulated deficit is significant, and their ongoing losses raise serious doubts about their ability to continue as a going concern. This is a key phrase in financial reporting, meaning there is a real question if the company can stay in business for the next year. Looking at their business operations, revenue concentration is a significant factor. Customer A alone accounted for over 52% of their revenue in the 9 months of 2025 and over 55% in 2024. Customer B is also a major contributor, representing nearly 39% in 2025 and over 26% in 2024. This heavy reliance on just 2 customers presents a major risk. If either of them decides to reduce their business with Shorepower, it could have a devastating impact on their revenue. And in a critical disclosure, the company states that their disclosure controls and procedures were not effective as of the 30th of September 2025. This means that the systems in place to ensure that financial information is accurate and timely are not working as well as they should be. This is a serious internal control issue that investors should pay close attention to. Now, looking at Shorepower Technologies, their core business in transportation electrification infrastructure, which includes electric vehicle charging stations, is a very promising and growing industry. They have a real opportunity to capitalize on the shift towards greener transportation. The significant increase in revenue for the 9-month period driven by government contracts shows they can secure business. However, the financial picture is quite concerning. The high level of debt, substantial accumulated deficit, and ongoing net losses paint a picture of a company that is struggling to become profitable. The heavy reliance on just a couple of customers creates a significant risk, and the disclosure about ineffective internal controls adds another layer of worry, while they are seeing some positive trends like improved cash flow from operations and better gross margins. They are not yet at a point where their revenue consistently covers all their expenses. The company's survival likely depends on its ability to secure more sustainable revenue streams, manage its costs effectively, and perhaps attract further investment to bridge the gap until profitability is achieved. It is a classic case of a company with a good idea and a potentially good market, but facing significant financial hurdles to overcome. Alright, that is our breakdown of Shorepower Technologies Inc. Its latest filing, what do you think about their financial situation and their prospects going forward? Let me know your thoughts in the comments below. If you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community in the description for more discussions. Thanks for watching, and we'll see you in the next episode.